Hey everyone, Ford Motor Company stock offers passive income investors a dividend yield of 5%. But is the stock a buy at current valuations? That's what I'll consider in this video, looking at Ford's longer-term revenue growth, its profitability, its valuation, its long-term debt, and I'll also look at some broader macroeconomic factors, specifically worldwide auto sales and worldwide auto production, to evaluate Ford's prospects within its industry to finally come to a conclusion and answer if Ford Motor Company makes an excellent investment for dividend stock investors. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so like I highlighted, Ford Motor Company offering passive income investors a dividend yield close to 5%, 4.94%. I rounded it up to 5%. A similar yield investors can get by buying government bonds, U.S. government bonds. Anywhere on the timeline usually will yield you somewhere near this percentage. Interestingly, short-term government bonds will give you a higher yield than longer-term government bonds right now in an interesting scenario. But with Ford dividend stock, you have the possibility of increasing stock price gains to add to your dividend yield, which is not possible where it's less likely with government bonds unless you sell them before maturity. Now, longer term, Ford Motor Company is experiencing really strong growth here following a big crash during the early years of the pandemic. You can see that big recovery here, $177 billion in trailing 12-month revenue. The lack of production during the earlier stages of the pandemic really helped the car industry. It helped the car industry focus on more profitable, pricier models with all the bells and whistles, selling at higher profit margins, and Ford Motor Company was a big beneficiary of that trend. It was also benefiting some of the newer electric vehicle companies because there was limited supply of internal combustion engine vehicles, and that shifted some sales to electric vehicles when consumers would have preferred buying an internal combustion engine, but they purchased an electric vehicle because that's what was available. I remember in 2021, I think I called to get a quote on an SUV I was interested in, and the dealership quoted me $10,000 above MSRP on a $30,000 model. And I said, no, thank you, and hung up. And that's the scenario the car industry was in 2020, 2021, 2022, because there was a huge shortage. And so dealerships were really taking advantage of consumers in marking up prices and looking for the person who's willing to pay the highest price to buy those limited inventory on the lots. Nowadays, though, the scenario is reversing. There is now an incredible oversupply of vehicles. Inventories are increasing. This is especially the case for electric vehicles. As internal combustion engine vehicle supply has increased, people for most parts of the world have avoided electric vehicles. Less than 1 out of 10 consumers are buying EVs. Now that's more prominent outside of the US. In China and Europe, they're buying more EVs than in the US because their market dynamics are more favorable for EVs in those regions, not so much yet in the US. Now, looking at the worldwide automotive industry, in 2023, 94 million motor vehicles were produced worldwide. 94 million vehicles were produced worldwide. I want you to keep that number in mind here, 94 million. In 2023, worldwide car sales were 75.3 million, and that was up from 67 million in 2022. So that was a big jump year over year, but still, compared to 75 million cars purchased versus the 94 million produced, there's very, very large mismatch between the capacity and the purchase. The industry is oversupplied and it's getting worse. Since 2019, there's been a surge in supply for vehicles, and that's been led by electric vehicles. Remember, these new companies, these new electric vehicle companies like Tesla, NIO, Lucid, Rivian, Fisker, etc., all of these new companies, they've built manufacturing capacity for these electric vehicles. They haven't destroyed or converted existing manufacturing capacity. They've just added to a market that's already been plagued with oversupply for decades. But that unique dynamic during the earlier stages of the pandemic with supply shortages put the market in better balance, and so car companies benefited from that trend. That's now reversing, and the industry is going back to that oversupplied scenario, which is going to lead to all of the price competition you're seeing, especially in electric vehicles. That's the industry that's most troubled right now within the car industry, and it's not a good position to be in. You've heard me talk about the car industry being one of my least favorite industries to invest in, and this is one of the reasons why. It's oversupplied, and that leads to massive, fierce competition for sales, because if you've got the capacity, you want to make more sales because you've already got the ability to make so many cars. If you don't make them and sell them, you're paying for that capacity and you're not making any sales. It leads to bigger losses. So you can generate fewer losses if you sell closer to your capacity. But the problem is that there's an industry-wide overcapacity. So this is not an industry that's very attractive for investors. See that playing out in Ford's operating profit margin. Again, briefly, those moments during the pandemic that were very favorable to car companies boosted profitability for Ford to an unsustainable level. Operating profit margins above 16%, approaching 24% here for Ford Motor Company. That was the highest in the last decade. It never approached anything near that level in the last decade. But the pandemic was a unique scenario that was good for all car companies, Ford included, but especially the electric vehicles. And you saw that frenzy in EV stocks, and all these prices went up because people were short-sighted. They weren't looking at the industry longer term. They were just looking at it in that bubble during the pandemic, and they were like, oh my goodness, these electric vehicle companies are amazing. They're just going to be the future, and let's all buy these EV stocks. I tried to warn investors, don't get too excited about these EV stocks. This is just a short-term blip because of the unique market dynamics. The car industry is not an attractive industry. Those who listened. Those who didn't, unfortunately, they're suffering massive losses from those EV stocks that were purchased in 2020 and 2021. Now, Ford's profit margins are back down to reality here, an operating profit margin of just 2.57%, just 2.57%. And this is an industry that requires billions and billions of dollars of capital investment in manufacturing, in inventory, just to stay competitive, just so you can generate operating profit margins of 2.57%. Not very attractive. Cash flow from operations also not very attractive at 7.61%, considering the competition, the cyclicality, the risk, and the sheer magnitude of the price of selling each vehicle. And on top of that, consumers need to finance these purchases. If consumers had to pay out of pocket without financing, imagine how much lower car sales would be. So car sales are much higher than they should be, and they're oversupplied anyways. So not a very attractive industry. And I guess the valuation is cheap, which reflects the non-attractiveness. Ford Motor Company is trading at a forward price to sales of 6.2. So despite the strong dividend yield of 4.94% and the relatively cheap valuation, I didn't even mention the total long-term debt, $149 billion in long-term debt for Ford. So, and that was required because they have to offer customers financing. They have to spend billions of dollars investing in the business, increasing manufacturing capacity, financing inventory. Overall, I don't like car companies. Ford being a car company, it's in an industry where you have to be so good in order to eclipse the unattractiveness of the industry, and I don't see Ford as being that good of a performer within an unattractive industry. So I would just say, no, I don't recommend. I don't think Ford is an excellent dividend stock to buy. And I'm updating that recommendation here on May 21st. I think passive income investors have better choices on where they can generate passive income through dividend stocks. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.